Hello, friends. Hope you're doing well. Let's start with the topic of the day, which is deposit products, which is also known as liability products. So, liability means for which some a bank has to pay. You see, in case of liability product, bank has to pay interest to deposit holders. This term of interest is called as interest expanded. And when banks are giving the same money of deposit which they have raised from general public in the form of loan, the concept is called as interest earned. So interest earned minus interest expended is what is the margin for banks. Okay, the term margin is also called as spread and also called as you see the gap. So you may have any of these terms to define the concept of margin. Let's go into this topic, which is liability products. Now you see, banks do have deposit scheme. Every bank has to have a policy of their own. They set their terms and condition, mainly in line to what RBI is expecting them to do. So when it comes to deposit scheme, deposit is a very important function of banks. There are two types of deposit. One is demand and second is time deposit. So you see, when it comes to demand deposit, what is demand deposit? It is a type of deposit which can be demanded at any point of time by the customer. Customer will not be giving you any advance notification. Maybe, yes, in certain cases where amount required for withdrawal is huge, there may be a condition where some banks are putting up a check by informing their clients to inform bank officials at least one day before this withdrawal, so that they are supposed to arrange it. Sometimes they have to get it from somewhere else, like let's say some specific denomination you want a huge amount of cash, which may not be the daily permitted limit for this bank to hold. So in such cases, there may be a requirement of intimating at least 24 hours before the withdrawal. Okay, same practices lies with banks also. When they have to go to RBI, there has to be a requisition form to be filled by banks at least 24 hours before their visit to RBI. No doubt, we can get it on short notice also, but it is better if we plan it and we inform it to the counterpart. In demand deposit, a customer will not be giving you any intimation. And the some of the examples here is like you have current account, which is meant for businessman. You have saving account, which is meant for like daily usage of common person. Then you do have call deposit. You see, you do have call deposit means, again, this is a deposit which can be withdrawable at any point of time by the depositor. Then you do have term deposit, which is like, from name itself, it is clear that it is going to be a long term deposit. So FD is an example of it. Hybrid deposit is nothing but it is a mix of easy ATM withdrawal, like in case of a saving account, and high interest rate, which is in case of FD. So it is a mixture of both saving and FD, bringing in the benefits of both the accounts. So as a viewer, I'll recommend you one thing very important. So let's say your family member, someone senior in family, is holding up a good amount of retirement corpus with any of your commercial bank, maybe public sector or private sector. You need to tell it to them that there is an account called as hybrid deposit account. It is also called as flexi fixed deposit. The other name is, like, you see, flexi deposit. What is this deposit? This deposit is like in which money will be kept in the form of an FD, but the FD receipt will be kept with the bank. Instead of getting a receipt, you are getting an ATM card which you can use to withdraw your money from your account anytime you want. You see, what we are doing is like we are making an FDR in your saving account, and we are attaching your FD to your saving account, so as to, like, if there is an emergency and you would like to withdraw, you need not to come to branch. You need not to discharge the FDR and then give it to bank official. You see, bank official will get it discharged on the day you are making it. Yani this FFD scheme, it is a type of deposit only. They'll get it discharged, will keep it in their records. Whenever you need money, you simply need to go to an ATM and withdraw it. Okay, so this is what is very important. You, till the time you keep this amount with the bank, you will get high rate of return. But if in an emergency you would like to withdraw, you need not to come to your branch for doing the documentation part. Okay, so these are the various types of demand deposit that we have for customer. Let's go into term deposit. Term deposit is where, you see, you have a fixed tenure starting from minimum 7 days to maximum 10 years. You see, this is the timeline. Okay, so if it is a contract for 7 days, you see, if you withdraw before 7 days, is a breach of contract, so there may be a possibility of a penalty. So maximum FD tenure is 10 years. Now, fixed deposit means what? You give lump sum amount of money to bank in the form of a deposit, which you'll get on maturity. Now, you are not only going to get your principal amount, but also your interest. Okay, so this will be on a future date. So, future date, if you try to withdraw before the maturity date, is called as premature withdrawals. Allowed, no problem. But you see, you have to pay some amount of penalty, but this all depends on your bank's policy. Sometimes they do have it, sometimes they don't have it, just to attract more and more of deposit. So accordingly, you just check the terms and condition of your respective bank and will do accordingly. Okay, next is like you have a recurring deposit. Recurring deposit is like where in a situation you don't have lump sum amount in your pocket, but you are getting salary which is a decent one, and you can take out some, let's say 5 to 10,000 rupee or any amount, any fixed amount of money, which you can keep it in your bank account on regular interval every monthly installment. Okay, in monthly installment, it can be again for a minimum of 1 year to a maximum of 10 years. 10 years means 120 months. The interest rate is paid at the rate of your fixed deposit. Okay, so on the date of making this FDR, whatever is your rate structure, you'll be getting the same rate over the entire period of the deposit. Okay, so now you see system is so dynamic that they are coming up with certain recurring deposit schemes where even you can increase your installment amount over time. Now for that you have to consult your respective banker. Now you see next is like you have hybrid deposit or fixed deposit, which I already discussed it with you in the previous segment of demand deposit, because a flexi fixed deposit is also a type of demand deposit only, where you're getting high rate of interest with withdrawable facility from a nearby bank ATM. So you see this hybrid also goes into term deposit, because initially when we made this deposit, it is usually made for a longer tenure, but can be prematurely withdrawn at any time. Okay, so hence it is into term deposit. Now another important aspect in a deposit is like you have to look for the insurance part. Okay, now the values which are put up in this slide, they are old, so we need to change it somewhat. Like in this case, insurance of deposit is done by Deposit Insurance Credit Guarantee Corporation, where you see here in this slide it is mentioned that maximum amount of 1 lakh rupee is covered. You see the previous regime, this is the previous regime where saving account was having a cap of 250 rupee loss, and FD fixed deposit was having a cap of 1 lakh rupee. But now things have drastically changed. You see, you must have heard about the case study of Punjab and Maharashtra Cooperative Bank. So there, you see, RBI came into action, and according to the media, the resentment in the masses or public was so huge that you see 1 lakh rupee compensation per account is not sufficient. So that time, government passed a legislation and increased this value from 1 lakh rupee to 5 lakh rupee. Now, whatever amount you keep in your saving account or you keep it in your FD, that is allowed to be compensated back to you if it is within first 5 lakhs. Okay, so now compensation limit has gone up to 5 lakh, including for both saving and FD. So in the bottom there is a case study which is mentioned. Let's study this case study in the context of the previous laws that we have, that is like maximum of 1 lakh. Now you see in first case, which is like they're telling Shri Vinay is there. He's an individual. He's keeping 17,200 rupee in his saving account, and then 22,000 rupee in current account, and then there is an FD of rupee 80,000. So total deposit, when you aggregate these three values, you're getting 1,19,200 rupee. Okay, let's say this banks goes into a crisis and not in a position to repay their dues. Any deposit holders' money is stuck. So if we are going to invoke this bank insurance, which has been bank insurance of these deposits, you see the maximum amount of compensation will be 1 lakh only, not 1,19,200 rupees. So net loss to Vinay will be only 19,200 rupees. Take another case of Shri Vinay, who is the third party. Vinay, where he is acting as a guardian for a minor whose name is Anil. So saving account 7,800, FD 80,000, and total deposit 87,000. You see, in this case, you are having a total aggregate deposit of 87,800 rupees. Now you see what is your claim amount. Maximum claim amount is up to 1 lakh. So this claim of 87,800 will be settled in full. Means entire amount of money will be recovered. But in first case, it will be 19,200 rupee, which is exceeding. Customer has to bear it from their pocket. So I'm just giving you the like computation part, how it needs to be done. So if you have 5 accounts in same bank, so all those 5 account values will be merged up together to calculate your total amount of deposit, and then they'll see what rules are applicable. But only one escape from this is like, do not keep all your money in one bank account. If it is in two different banks, so for every bank you have a coverage of 5 lakh rupees. So I strongly recommend people who are literate and they do have good amount of money with them, kindly split your money across different banks and try to explore these old generation private sector banks. Like you have South Indian Bank, you have Catholic Syrian Bank. Their rate is also good, their service is also excellent, and you see, you also get this coverage of deposit insurance. Let me go further. Now you see one another dimension of you see account opening or deposit creation is like you have to go very specifically into KYC norms. Know your customer. Why it is important is like while opening an account, there may be a high chance that these accounts are fake accounts, may lead to money laundering later. So KYC, know your customer guidelines, if they are fulfilled properly, then there is no such problem later. So money laundering already we know when we convert black money into white money, or we bring in black money into system in a very calculated manner with the help of bankers or some finance advisors. So in this case, you see the objectives of prevention of money laundering act is to enable banks to know or monitor their customer transaction. Okay, if manager or the person who is in charge is able to track these transactions, they may inform it to the right authority and action can be taken at the right point of time. Delay is not expected. So next is like you see the objective is to put in place appropriate control and reporting measures so that any suspicious transaction which is happening, suspicious means doubtful, it may be good, it may be bad. You see, we are not clear on the status, banker don't have the complete information, so they need to simply report it to the next authority, and the next authority will do a detailed investigation, because we cannot check each and every transaction. Suspicious transaction means, let's say out of 100 transactions, 3 transactions are suspicious in nature. So checking 3 is okay, but 100 transactions, all transactions to be checked in detail is not possible. We don't have infrastructure, we don't have resources. Now next is like the objective is to comply with applicable laws and regulatory guidelines. And you see, very important is like staff of your bank should be trained so that later on they cannot say I was not aware of this. Okay. So now you see, in money laundering, there are 3 stages. One is first is placement, second is layering, and third is integration. You can check another video of mine on my YouTube channel where you see all these things have been elaborated in detail with examples. Now let's go to the next segment, which is the main pillars of KYC policy. So you see here it is important that customer acceptance policy. Yani, you see, do you know when you go to a bank and you're trying to open an account, it is manager's discretion to decide whether to accept your account or not. Okay, you see, if manager is not accepting your account, there must be some reason. So customer acceptance policy should be there, black and white, so that in case of an emergency, in case of a dispute, in case of a confusion, you can follow it and then accordingly take a call. Then next is like when you accept a customer, you need to identify that customer, because you see, once you are opening this person's bank account and he is going to do all financial transaction through this banking channel, you are accountable for it. Let's say this party, let's say Ramesh is a person who is actually collecting a check, and this check is a fraudulent check. Now you see, money was collected through clearing, money was credited into Ramesh's account. Now the other party came to know about this transaction after a period of time, so they reported this case to authorities, and then when it is informed, now you see, this bank who has opened this account without proper KYC and documentation will be in trouble. Okay, so customer identification policy is very strict, stringent, and needs to be adhered in like in right spirit. You cannot compromise on this. And then followed by monitoring of all your transactions. This is what is important. All transaction means in a month, in a quarter, in half yearly period, in a year, how many transactions are you doing which is above 50,000 rupee in cash? Okay, any transaction in cash above 50,000 rupee will require PAN number. Anything below 50 is out of the preview. But still, you see, I tell you, being an ex-banker, I tell you, many a times fraud happens with the knowledge of bankers, where you see, we know that it is 50,000 is your limit where you need a PAN number. So why don't you put multiple transactions, do multiple transactions of 15,000, 20,000, 30,000 again and again, so as to avoid this like scanning zone, going into this scanning zone which is above 50,000 in cash. Second is like any withdrawal or deposit of rupee 10 lakh and above. This leads to bulk cash withdrawal. And you see, nowadays we are promoting digital cash, we are promoting fund transfer through clearing. You see, you can send it from one account to another account in digital form. Why do you need cash actually, and that to such an extent? You see, There may be exceptions. There may be a situation where you have to pay it in cash during Diwali or the Shara to your workforce because ATMs are choked up or something like this. So it is an exception, not always. Okay, maybe your staff don't have a bank account, so but you need to ensure it that they do have their account in due course of time. Okay, so once in a while something happens, so you prove it, then there is no problem. But if it is happening regularly, maybe indicating again towards a suspicious transaction, so we can look into the same. And this, who is going to do it? It is bank officials, and banks are going to do it, and they are going to report it to the right authority, and then risk mitigation or management. So if we have the information, we can manage it. Else, it is very tough. Now, you see, in the same process of deposits, we have some documentation also involved. So here is a list of documents which are required in case of individual when you're opening an account. Just to check your identity, it helps to establish KYC. So we can look into passport, we can look into PAN card, we can look into voter ID card. You see, these are government issued authorization cards, so we can simply rely on them. Ration card is not to be used. Driving license can be used, voter ID card can be used, job card issued by Narega, duly signed by officer or state government can be used, letter issued by UIDAI means Aadhaar card enrollment agency means if they are issuing it, that letter can also be used as a proof. Identity card, you see, now identity card is a very debatable issue. Now sometimes you are working in a private company, you are getting an ID card from a private company, they don't accept. But in certain cases, let's say your company is a reputed one, you work for Reliance, you work for Geo, you work for some other big brand, you see, they will accept. Yeah, it is a subject matter of manager's discretion. So if they are satisfied, they can go ahead with it. Now, next is like you see, letter from various recognized public authorities. Like you see, if the bank is satisfied, they don't have any problem and they'll open the account. Now you see, like opening an account, closure is also very important. So when it is a closure, it can be done in two ways. One is like customer is requesting it in the form of a letter or a email. You see, if once you get a customer request along with the inventories that they are holding up, like checkbook, passbook. Yeah, passbook they can return, but checkbook is something. If it is unused, you have to return it back to bank. If you have a debit card or something, you have to return it back to bank as it is bank's property. So you see, before you close your account, they'll ensure these documents collection and will, if there is any charge pending in your account, they'll try to debit the same and will close your account on your request. Second is where closure is done by bank. You see, sometimes it is a situation where customer is opening an account, with a malified intention, which was not known earlier, but they took up checkbook and later on banks started getting certain cases where customers are coming in with checks with like very heavy amount of money which is issued to parties without any balance in account. You see, in such cases, bank may be required to like intervene, counsel the client, and if client is not changing the practice and is carrying on with the default of fraudulent things time and again, and you see, bank is able to track some of the suspicious activities into the account, so they have like sufficient reason to close this or freeze it. Okay, so but for freezing an account, you need some government orders, like you revenue authority will send you revenue these attachment orders or garnishee order through court. You see, when you have it, you can block it. And you see, now we are dealing with some special types of accounts. Again, it is a matter of high importance. When you are dealing with old people or people who are handicapped in nature, incapacitated people, you see, these handicapped people, it is tough to deal with them. Okay, so what you need to do is like in such cases, one thing that we have initiated now, SBI has initiated, is like you can give them door to door service. Any bank official will go to their place, will get the transactions done at their doorstep. They need not to come. Okay, second is like if they are able to sign, what you can do is like take the check to their place, get it signed by them, and get some witness. You see, witness is very important. People who cannot deal in their independent capacity, they are requiring a neutral witness is very important. Okay, so you can use the thumb impression. With thumb impression, you need to take the signature of the witness. What witness will ensure is like the amount which is written on the check is actually given to the client. Okay, so that no representation will be accepted later regarding some wrong amount debited into the customer's account. So they need to be accompanied by someone. Okay, So this is what is like dealing especially with these types of customers. So next is like you can deal with physically, like once you did it with physically impaired people, now it is visually impaired people, people who don't have eyesight. Okay, so there you see again, when it you look into the laws, you'll find that they are given all rights. Okay, they're competent enough to contract, they are allowed checkbook facility, they are allowed ATM, they are given locker facility. You see, they have their own like style of like reading. Reading means they are very sensitive. They read it through a special, like you see a special language. I'm not able to remember it, but you see on every note you do have some special prints, a diamond, circle, okay, a square. You see these symbols, when they touch it they'll understand which currency note is this. They are very very sensitive, very smart, very intelligent. So with this, again I'll end this section of